Hey guys, Toby Mathis, and do you want to know what Warren Buffett thinks about real estate? Hey, me too. Well, this is the beautiful part about having the internet is that you can go look at his letters to shareholders over the years, and in one of those particular letters, he writes about two of his real estate investments, and I thought it was pretty telling. And so I'm just going to read some excerpts so that you get an idea of what Warren Buffett, one of the greatest investors of our time, if not the, what he thought about real estate and then his working. So he kind of says this. He's talking about his different real estate. And he says, this tale begins in Nebraska. From 1973 to 1981, the Midwest experienced an explosion in farm prices caused by widespread belief that runaway inflation was coming and fueled by lending policies of the small rural banks. Does that sound familiar? Well, we've been getting smacked with that inflation stick, right? Then the bubble burst, bringing price declines of 50% or more that devastated both leveraged farmers and their lenders. 5 times as many Iowa and Nebraska banks failed in that bubble aftermath as in our recent Great Recession. So this is right after the 2008-9. This was in 2014, if my recollection serves me. I needed no unusual knowledge or intelligence to conclude that the investment had no downside and potentially had substantial upside. This is what a lot of us see in the real estate market when you see an anomaly. 2008, 9, and 10, I wish we'd go back and buy tons more real estate during that period of time because it was such a no-brainer. Well, you're going to be looking back in 10, 15 years, 20 years from now, probably going the same thing. There would, of course, be the occasional bad crop and prices would sometimes disappoint, but so what? There would be some unusually good years as well, and I would never be under any pressure to sell the property. Now he's 28 years later, and the farm has tripled its earnings, and it's worth 5 times or more what I paid. I still know nothing about farming, and recently just made my 2nd visit to the farm. So I want you to remember that. That's pretty good. When we talk about infinity investing and we talk about not having to work and just having something that's paying you, this is exactly what we're talking about and why we like real estate and why we like stocks that pay dividends and we stay away from things that don't pay us. Then in 1993, I made another small investment. Larry Silverstein, Solomon's landlord, when I was the company's CEO, told me about a New York retail property adjacent to New York University that the Resolution Trust Corp was selling. Again, a bubble had popped, this one involving commercial real estate. Make specific note at this time of where we are in the world and whether the commercial real estate bubble has popped yet, because it's always going to go cyclical. And so depending on when you're watching this video, it's either going to be like it's either already occurring or it's about to happen, right? You're going to see it. And the RTC had been created to dispose of the assets of failed savings institutions whose optimistic lending practices had fueled the folly. Again, it sounds like the Great Recession again, where you just have too much lending, too much lending. Here, too, the analysis was simple. As had been the case of the farm, the unleveraged current yield from the property was about 10%. In a fancy way of saying that's like its cap rate, right? Without a loan. Your cap rate where you don't have any lending, so the net operating income. But the property had been undermanaged by the RTC, and its income would increase when several vacant stores were leased. Even more important, the largest tenant, who occupied about 20% of the project space, was paying rent of about $5 a foot, whereas the other tenants averaged 70. So they had one tenant who was paying a tiny amount compared to the rest. The expiration of this bargain lease in 9 years was certain to provide a major boost to earnings. The property location was also superb. NYU wasn't going anywhere. Long story short, without getting into it, the income from both the farm and the NYU real estate will probably increase for decades to come. Though the gains won't be dramatic, the 2 investments will be solid and satisfactory holdings for my lifetime and subsequently for my children and grandchildren. The wisest investor isn't looking at this as a potential to make a little bit of money now. What is he talking about? He's talking about generations. He's talking about his lifetime, his kids, and his grandkids. And so he tells this, and he says, I tell these tales to illustrate certain fundamentals in investing. And this is really important. If I had a pen, I'd get it down. By the way, if you can, go down into the comments, and at this point, tell me what you think. I like going back and reading and saying, all right, All right, let's see where you're at. So if you're halfway through and we haven't talked about the fundamentals yet, what are you thinking about real estate investing after just listening to Warren in his writings? You don't need to be an expert in order to achieve satisfactory investment returns. But if you aren't, you must recognize your limitations and follow a course certain to work reasonably well. Keep things simple and don't swing for the fences. When promised quick profits, respond with a quick no. This is golden advice. You make money, the wealthiest folks, and my clients is what I use. Like I look at the people that I've been working with for more than 2 decades that are consistently making great returns. And they're in no rush, and they are investing in things that have solid cash flow, and they aren't trying to make quick hits. We do that with stock trading too. Is if you're going to be a trader in the stock market, you got about a 5% chance of making money. If you are an investor in the stock market with long holds, it's virtually 100%. Focus on the future productivity of the asset you are considering. If you don't feel comfortable making a rough estimate of the asset's future earnings, just forget it, move on. No one has the ability to evaluate every investment possibility. Hey, you don't necessarily have to be able to predict the future, right? But if you can't, don't do it. Like if you have any question, that's why I stick to rents and dividends. Dividends, I can look at past performance. Rents, I can look at past performance. I can look at markets. I can look at trends. And I could say, oh, this is where it's going to be. It's just, statistically, this is what is the most likely thing that's going to happen. If you instead focus on the prospective price change of a contemplated purchase, you are speculating. There is, and by the way, that means, what is it going to go up in value? If that's what you're focusing on, don't. There is nothing improper about that, I know. However, I'm unable to speculate successfully, and I'm skeptical of those who claim success doing so. Half of all coin flippers will win their first toss. None of those winners has an expectation of profit if he continues to play the game. And the fact that a given asset has appreciated in the recent past is never a reason to buy it. This is fantastic. We don't care about the price of the asset. What we care about is what it is going to generate us, what it's going to pay us. With my 2 small investments, I thought only of what the properties would produce and cared not at all about their daily valuations. Games are won by players who focus on the playing field, not by those whose eyes are glued to the scoreboard. If you can enjoy Saturdays and Sundays without looking at stock prices, give it a try on weekdays. Like, that should actually be just put on a t-shirt, right? It's not about the daily valuations. We don't have ticker signals over our homes, right? Forming macro opinions or listening to the macro or market predictions is another waste of time. Indeed, it is dangerous because it may blur your vision of the facts that are truly important. When I hear TV commentators glibly opine on what the market will do next, I am reminded of Mickey Mantle's scathing comment. You don't know how easy this game is until you get into that broadcasting booth. That's about right. Anyway, this is one thing that he said, and I'll leave it at this. There is one major difference between my small 2 investments in real estate and an investment in stocks. Stocks provide you minute-to-minute valuations on your holdings, whereas I have yet to see a quotation for either my farm or New York real estate. Wow. It should be, yeah, we're just going to leave it at that. I'm just going to leave it at that right there. When we're sitting here looking at the value of something as opposed to what it's producing, we will be misled. If you focus instead on what it's producing, which is what we call infinity income, that's what I heard. Rent, royalties, dividends, interest, and short-term capital gains from the sale of options are infinity income. There's 5 of them, and it's pretty clear. It's an asset that's producing cash. When we focus on what's that cash, we have a much higher likelihood of being successful. In fact, it's virtually certain over time, if you invest in assets, that you will become wealthy. It's just being patient and methodical about your investing strategies. So with that, if you have comments, leave them below. If you like this, share it with somebody else. Maybe it'll keep somebody from chasing after the stock market, or maybe it'll help somebody who says, Warren Buffett doesn't invest in real estate. Well, actually he does. And this is what he said about it. And this is literally quotes from Warren Buffett about real estate. So you don't have to speculate anymore. It's about the return. It's not about it going up in value. It's about what that asset produces over time. And that's what really matters.